Now, Roshan Kumar asks, how important is it to invest in a small cap fund for wealth creation?
Well, it's not at all compulsory to invest in a small cap fund. Well, small cap segment of the market generally tends to be more rewarding over the long term, but stocks in this segment are also riskier and more volatile. Typically, they have a higher mortality rate. These companies also find it harder to survive through the economic shocks of the kind that we witnessed during the pandemic times. And there can also be other issues like corporate governance issues, which could be hard to detect or unearth. So it is basically a high risk, high reward strategy meant to play a supplementary role in an investor's portfolio. Typically, one should look to allocate not more than 10-15% of their overall corpus to small cap funds, and that too if they are okay to withstand severe ups and downs in their portfolio value. Otherwise, one can easily do without small cap funds. Remember, even the multi-cap funds typically allocate some portion of their money to small caps. So even if you are investing in multi-cap funds, you tend to get a reasonable small cap exposure in your portfolio. Now, if you do decide to take some measured exposure to small caps, it's desirable and preferable to do so through mutual funds rather than directly in stock markets, because this segment of the market requires a far deeper level of research and continuous monitoring, which may be difficult for an individual retail investor to do on their own.